outside of COVID, obviously there are numerous things going on in the world that influence our decision making, whether we're investors, developers, occupiers, financiers, and advisors. Coming back onto that, the vaccine is very key, and as of data that we've been looking at as of Monday, the UK is at about 7% vaccination of its population, followed by Denmark around 3%, and pretty much the rest of Europe is well under 2%, closer to the 1% mark. So that really needs to pick up pace, to give some confidence back to the markets. Otherwise, economies Marek's already touched on, and in terms of cycles, we came to the end of what was an unprecedented 10-year cycle during 2020. And we'll come on to that in a minute. Otherwise, that political noise, and obviously, hopefully today in the US will go ahead without any major catastrophe. But one of the key themes across most of the sectors of real estate is corporate governance. We're coming to the end of the financial year, whether that be now or in sort of March, April time, and we'll get to see a sort of a health check of where corporates are and where they sit, and how that will impact on those covenants that we all rely upon. Labour markets are very key. Most labour markets will grow in terms of unemployment throughout this year. A lot of that's coming from that hospitality and partly retail sector and travel industry. So some of those skills are not really transferable for those sectors that perhaps need it. ESG, wellness, energy, these are big topics, and again touched on by Marek, will grow in importance again over the next few years, particularly as we can become more digitized and automated. There will be a massive demand for energy, and of course data, which leads on to then innovation and prop tech, which we've seen come along in leaps and bounds over the last few years, and certainly predominantly over the last few months, and hence we're already using it today. Business and private travel has obviously impacted greatly also on our markets, and if we go on to the next slide, we will see that this has had an impact on amongst other things on investment volume. So these are preliminary numbers for 2020, but we're about 26% down across the CEE 6 markets that we cover here on 2019, which is roughly in line with the preliminary figures posted by RCA, where for the whole of EMEA, which is again approximately down by about 30%. In addition to that, the number of transactions is down in 2020 by 35%, but the average transaction size was up by 16%. Now, Poland, again, one of the largest market in this region, unsurprisingly, and typically takes the lion's share with about 50% of the region's volumes, followed by the Czech Republic with 25%. On the next slide, we'll look at the sectors and what people have been investing in this year. So off the bat, there were two very large portfolios transacted. One by Heimstaden, the Residomo a residential portfolio in the Czech Republic for 1.3 billion, and then there was the sale of the shares of the GTC portfolio. So those two deals themselves made up 22% of the volumes this year. Last year. Offices, industrial logistics performed very well. PRS mainly through one deal, but again, this is in line with the views that we've been receiving from our global investor survey, our report, which was launched yesterday, the 2021 Global Investor Outlook. So again, most investors looking at those sectors. Retail was heavily subdued, and the majority of the transaction volume for retail was largely in sort of big box food, retail parks, with obviously the gap there with shopping centres not trading for obvious reasons, with a lot of closures and uncertainty in that sector. Hotels obviously subdued again this year. Now on the next slide, we'll look at pricing, and again, just to explain this very quickly, the colourful dots current position and the black dots or black lines where we were at the end of the global financial crisis. Again, in general rule of thumb here, we've moved offices out by about 25 basis points. Industrial has largely remained stable or even compressed in many markets, and already pushing on prime shopping centre yield levels. And prime shopping centres, we've moved outwards by about 50 basis points. Again, there is a lack of evidence in some of these sectors, but the movement with industrial again shows the desire from investors to invest into this, what has been a very robust sector through the crisis. And again, against Germany, again there still remains quite a reasonable spread between the main German 4 markets. And furthermore, on the government bonds, 10-year bonds, and interest rates, which are still hovering around 0. So, the real estate picture is still very compelling, and again, the appetite from investors, we believe, will come back once there's more stability coming out of vaccines and where the markets are settling. On the next slide, again, just very quickly, these are some of the trends we know about these. Working from home, how long will this continue? And again, these are all related again to those vaccines. Leasing activity at the 9-month period of last year, leasing activity across Central Europe was down about 40%. Again, very much in line with Europe. Again, subleases, flex space making an appearance in the news, and business services for this region, global business services, shared services, a very important occupier group. Going forward, pipelines, some of that will be delayed, partly due to financing, partly due to where markets are sitting, but we could expect vacancies to creep up slightly, affecting people's decisions on whether to go forward. Also, construction costs, will be monitoring those going forward. On the next slide, in terms of the retail market, obviously very challenged industry and sector with trading restrictions, not being able to open, retailers struggling to keep themselves afloat. Interestingly, a lot of retailers are here in Central Europe as franchise, and they don't necessarily always have control over their e-commerce platforms, which adds to the impact of having with store closures, makes things even more difficult. But e-commerce again has risen. It's still in most markets quite a small percentage, less than 10%. The highest in the region is Czech Republic with 18. So again, there's still a considerable amount of retail that does rely on brick and mortar, and that will change over time, but it will take time. Again, that model between landlord and retailer needs to be looked at and decided on fairly, and how shares should move forward. But again, these things will take time. They've been around before and will be around for some time yet. And finally, in the industrial and logistics sector, on the next slide, this is, again, we know this has been the darling of last year. Leasing activity remained robust, particularly from e-commerce and logistics demand. Production again had some challenges with factory closures and production facility closures due to COVID, and there's along with supply chains, which Marek mentioned. But a lot of that's back operating fairly fully, and again, we do see that CEE will be a benefactor of the sort of shift in supply chains to a sort of slightly more robust model rather than a last minute or just in time model. Again, energy and data comes heavily into impact, and as does land and labor availability. The reliance on the automotive sector in this region, again, are all things that we'll be monitoring closely. So I think, again, very short time to wrap up and cover everything, but hopefully that's sort of a good indication of what we've seen and what we will look forward to over the next year or two.